Coming up in today's video, we'll be talking about the stock market slide that we're seeing this morning with some of the key banks reporting, like JP Morgan, which beat on the top and bottom line, but the stock is moving lower. Citibank, which beat as well, making a move higher here today. Wells Fargo, which is, well, dropping hard here as we speak, down about 6% from its highs this morning. And Nvidia hits $171 per share. This stock is absolutely on fire. Despite the market itself making a move lower, this stock keeps ripping anyways. The question, however, is there some buying the dip opportunities with today's sell-off? Let's get into it. As I mentioned, stocks are a little bit mixed this morning with some of the mega tech stuff like Nvidia, Oracle, Google, Apple, Palantir in the green, but then you have a lot of stuff that's actually in the red today. You got Delta Airlines down, United Healthcare down, American Express down, Uber's down, Spotify, Coinbase, Carnival Cruise Lines, etc. And Tesla down 1.1%. But let's start with Nvidia. What's behind this ginormous move higher and this dominant uptrend that seems to sort of have erupted out of the April lows? Well, we had some good news for Nvidia. Nvidia says it will resume H20 AI chip sales to China soon, following US government assurance. And remember, if you're going to talk about Nvidia shares, it's all about them finding their next customer right now. We know that Nvidia has big customers as it is, Microsoft, Meta, these huge corporations, Tesla, right? They love buying chips from Nvidia, and that's been the picks and shovels business to the AI trade. However, Nvidia, in order to get the stock price to really skyrocket higher, one of the big buyers on the menu would actually be selling to countries. And we know that Nvidia sells all sorts of chips to major US corporations. But we've recently seen some exciting news about Nvidia, such as the possibility, as we just got done discussing, of resuming sales to China and what's happening in the Middle East. So if you get more sales to some of the wealthy nations of the Middle East who really want to buy in and invest in AI alongside other major places, not to mention if chips can be sold to all over the world, these are new customer bases, and there is some serious wealth to be extracted from Nvidia selling to all other parts of the world. And as a shareholder of Nvidia, I'm definitely happy with this huge move higher. But the question is this stock getting overvalued at $171 per share? Well, first, let's talk about the technicals. The technicals look phenomenal for this stock. You had a downtrend that broke clearly around the May mark here. We shot up higher and have been trending with very little pullbacks since then. This has actually been leading the market higher here recently and is a nice sigh of relief for people who were doubting Nvidia's ability to kind of charge higher with the AI trade. I currently own 500 shares of Nvidia, and this is a very full position for me that I'm not really looking to add a whole bunch to, but at this time I'm up, well, about 54% on my position. So is now the time to start cashing in some of my Nvidia shares, or would it be better to just hold throughout this? Well, anytime I take a look at stocks, I like to use what is referred to as a top-down approach, meaning I typically will look at the macro scenario. So I typically like to look at the macro scenario or the state of the overall economy, and then I like to look down into the nitty-gritty of the particular company. And so when I look at the US economic outlook, I can use the macro screener on the stock box, and we can see that overall inflation came in today in line with expectations. This was neutral for stocks in my view, because while inflation did come up to 2.7%, it was largely expected to do so. We also have had some pretty good PMI numbers here recently, both on the manufacturing and services PMIs statistics. Wage growth is still outpacing inflation at this time, and we've had an NFP report which came in really strong. So I think that the consumer is employed and inflation is not killing them at this time. So overall, I would say that the economic outlook for the US, especially with rate cuts on the way, does seem promising for me at this moment. And if we take a look at the financials report for Nvidia, what we can see here is that we overall have rising revenues and rising net income. I like to see this when I'm looking at a stock. We also have a really high profit margin as well. When priced against its own earnings, the PE ratio also shows that the stock is not extremely expensive relative to its own history. Now, a lot of people would say Nvidia is a very expensive stock relative to its earnings, but that would largely be because they have such strong, predictable earnings growth as we just got done seeing. We've also consistently seen the stock beat their earnings estimates in the last 4 quarters. And if you're interested in exploring the tools that I'm using to check out financials reports for many, many different stocks, as you can see right here, then consider trying out the stock box. I'll leave a link in the description down below to where you can try it out for 30 days. And if you're interested in getting some details about how our trials function, simply fill out that form in the description down below or the pinned comment comment of this video. Within the tool, you can scan everything from PE ratios, income statement data, earnings report trackers, earnings per share, price to free cash flow, which we just added. And soon you'll be able to check out the top stocks algorithm, which shows you top stocks based on our scans here that the stock box has found. Same thing for top sectors. If you're somebody who likes trading ETFs, this one might be for you. And our macro screener will allow you to keep an eye on economic data and how it could impact stocks at large. So try out the stock box, link in the description below. So for me personally, when I look at Nvidia, I don't see this stock as necessarily massively overvalued relative to its own history, although the price action does look a little bit stretched. So I probably won't be adding any shares, but if we were to see a pullback, the stock would become more attractive to me for possible adding to my position if I didn't already have an existing very large position in my account. Google's also on the rise here. I've got 200 shares and pushing off of these lows, looking really strong. I was looking to see if I could get another buy in on Google, but price didn't quite come down far enough for me to get into more shares. And a little bit of a smear to Robinhood stock here because we did get the trade desk actually being added to the S&P 500 rather than Robinhood. Many traders and investors had anticipated that Robinhood would be added to the S&P 500, but instead, like I said, they added trade desk, which ended up shooting up higher here on this news overnight by around 12%, giving back some of those gains here now. Robinhood to me is a stock that I want to hold long term. However, on a price action basis, I do also think this is stretched. Here's an updated view of my hood position. You can see I'm sitting on a nice gain, but I also still have these calls sold, which of course I have the $95 strike price. So I would not mind if in the coming weeks we did see a pullback in the stock, allowing me to capitalize on both the calls that I've sold as well as the stock shares that I own. This is what is referred to as a covered call position, where you own the underlying shares, but you've also shorted a call. Here's a look at my Tesla position as well. I am looking to sell covered calls on this one, but personally, I don't really see this at a stretched level in either direction. So if we can get a push up in the stock price of Tesla, I may look to sell the 375 or 380 calls, but currently just sitting on my existing 400 shares of Tesla. Here's an update on my Lulu position, which I own shares in. I have 100 shares of Lulu, but I also have shorted a call. The calls are in profit now because of course the stock has dropped. I'm up 53% of max profit and plan for now to continue to hold these calls on the short side. If we do get a rally in the stock, I would be taking profits on the shares that I own, as well as the premium that I pocketed from shorting the calls. Here's Delta Airlines, which I own 600 shares of and have also sold a call. This is another covered call position at a strike price of 55. So I do not have any more upside if the stock rallies. I've sold calls against the $55 strike price, but if the stock moves lower in the coming weeks, I may be able to actually take profits on the calls that I've shorted and make some money on the shares that I own. Another trade I'm in right now is American Express, a stock that I really like, down about 2.2% today. And I've also sold calls on this one as well at the 320 strike price. You can see the short call position that I'm in is currently in profit by about 31% of max profit. I'm also up about $5,500 or 22% on my AXP shares. I own 100 shares. Sorry, I actually own 120, but the 100 here is connected to the calls that I shorted for the covered call position. The reason I like covered calls so much is that they add income to my existing shares. Essentially by shorting these calls, I collect extra premium for doing so. With the downside being that if the stock rallies, then I will get assigned or called away from my shares and give up some of the upside. But if the stock trades sideways or even lower, I hedge my risk, collect income in the meantime. I'm also watching shares of Airbnb, which is a stock I have 218 shares of. I'm up nicely on the shares and also up on the calls that I shorted. I sold the 142 strike price on Airbnb out to August 8th. Another stock I own shares in is Exxon Mobil, which I'm up a little bit on the stock. I own 200 shares, but I've sold a call, which is negative currently because the share prices have gone up. So I'm giving back some of my gains on the calls that I sold. And if you're enjoying my commentary on stocks, consider subscribing. This is a new channel. We just crossed 1,000 subscribers. I greatly appreciate everybody who's been watching my videos. And if you made it to the end, do me a favor, type the word "end" in the comment section and I'll try and heart your comment. I greatly appreciate you as I start out this brand new channel dedicated to stock market and trading and investing. Thanks for watching.